So, hello everyone, a very warm welcome to all of you on our YouTube platform that is there to cater the needs of RBI Grade A, Grade B 2025 examination. Now, in this today's live session, we will be discussing the difference between the FDI and FPI that stand for foreign direct investments and foreign portfolio investment. Now, see, these are the two major sources via which we collect a lot of foreign capital, foreign investment in our country. Okay. Now, obviously, we also do export, import, and all these kind of things are there. But FDI and FPI is something that is extremely important whenever we consider the foreign asset management or whenever we talk about the foreign currency that we need. So, whenever we talks about the foreign currency that we need for our economic sustenance, okay, that is extremely important for us. So this is the main thing. Okay. Now FDI and FPI is something I told you the importance. It is directly mentioned in the syllabus of RBI Grade B as well. So, but the major difference is that you might be reading a lot of current affairs news around in regards to FDI. RBI also releases a lot of information about our FDI data and FPI data. But the thing is that we don't understand what is the fundamental difference between the FDI and FPI. ठीक है, what is the nature of FDI, what is the nature of FPI, ठीक है, because earlier there was financial investment institutions and multiple others classifications were there, but now there is, as of now, there is only two classification, that is FDI and one is FPI, and one should know each and everything about these two terminologies, what is the functioning of these terminologies. Okay, so this is extremely important. Now we will also know that why this thing is in news, and the reality is that these kind of topics always be in a news. Let it be some data releases by RBI, or if is there some kind of, you can say, net outflow or net inflow in gross FDI or gross FPI. So it will be in news at any point of time. But as of now, because of the tariff issues that is happening, so that tariff and this global volatility and global political tension is having a great impact on FDI and FPI of our country. So because of this reason, we will be having the discussion of this particular topic in our live session. So now just allow me a minute. Let me go ahead with the discussion. Let me present my screen and then we will go ahead with our discussion of the day. Just wait. Just wait for a minute. Okay. Okay, so I hope the screen must be visible to you people now. So I hope the screen must be visible, and I would be clearly audible to you people. Now let's move ahead with our discussion of the day. Okay. FDI versus FPI. This is what we will be discussing today, and this topic is extremely important. I have told you the importance. Okay. Now, why is it in news? Because recently RBI released a data. Now this data was in the month of July. Okay. As of now, we in September. So if you see the importance of this particular topic, that is FDI or FPI, it is going to be there in news because of any reason. Okay. There are n number of reasons that can bring this particular topic in the current affairs. So that is the thing. So if you see FDI inflows, RBI data, so net FDI inflows in financial year 25 fell sharply by 96% versus financial year 24. So that was the thing, that FDI, now net FDI means the gross FDI we received and the outflow that we had. Okay? So whatever we receive and whatever we have sent back, when we'll consider both of these things, then we'll talk about the net FDI. So on the same note, the 96% fell sharply by 96% versus financial year 24. So that's a huge decline in our net FDI inflows. There are multiple reasons. Okay? US uncertain political policies and financial policies. That is also a reason. If you see Ukraine Russia war and multiple geopolitical tensions are there, so it is having a great impact on our India as well. Although Indian economy is a thriving because we have very stable fundamental economic fundamentals, we have very broad and very strong economics fundamental, and our domestic demand is something that is driving our economy further. But FDI is also is something that you cannot you can say you cannot um, overlook whenever we talk about the international financial stability or our financial competitiveness. So FDI and FPI is something that we cannot overlook. So that's why RBI news was there. So I have kept it in this slide. But if you see, there can be n number of reasons because of which we can say that FDI is or FPI is going to be there in the news. Now, this decline occurred despite a rise in gross FDI inflows. It means the FDI we are receiving is increasing, but we also have a net outflow. That's why I said when we inflow minus outflow, then we comes to the data of net. And if you see, although we have seen rise in gross FDI, but outwards FDI outflow or the investment that our own citizens are doing or our own companies and corporates are doing in the outside world is having an impact on overall FDI inflows. Okay? It indicates higher outflow offsetting new investment. Now, what is FDI? If I'll ask you now, what is the FDI and what is the FPI? Most of the time people get confused. Okay? That what is the difference between an FDI and FPI? We know in both the investment routes we are getting foreign investment in our country in terms of dollar or in terms of whatever currency we are getting it. Okay? But if you want to know the fundamental difference, this is what we will be discussing today. Now, investment by a person resident outside India through equity instrument in an unlisted Indian company or 10% or more of post-issue paid-up capital of listed Indian company. Now, see, this mark of 10% is something that is extremely important, first of all. This is the basic, this one is the basic, you can say the key factor that distinguishes the FDI and FPI. Whenever we talk about FDI, we talks about 10% or more post issue paid up share capital of any firm. If foreign investment is more than or equal to 10%, we call it FDI. When it is less than or equal to 10%, we call it FPI. Now see, because of this 10% mark, the influence of foreign entity differs a lot. And that is the reason we have this, you can say, unofficial bifurcation. Okay? Because of this 10% of mark, it can greatly impact the you can say it can greatly impact the influence of foreign entity on our Indian corporate. Okay? So that is the reason. First of all, investment by a person resident outside India through equity instrument in unlisted Indian company, or he is having an investment post issue paid up equity capital of more than 10% of a listed Indian company. Current status, nearly 90% of FDI in India comes through the automatic route. So there are two routes if you see. Okay? One is automatic route and then we have the government route. In automatic route, they don't require the foreign investors don't require the prior approval of neither RBI nor government of India. Okay? They can directly come and they can directly invest. Examples are agricultural and animal husbandry, coal and lignite, oil and gas exploration, airports, industrial parks, telecom services, trading, etc. Now there is a government rules as well. So there are multiple there are multiple, you can say, ways in which we can have direct investment, foreign direct investment, but via government route only. So there are multiple areas which are sensitive enough so that government wants to regulate the foreign investment or the foreign influence those areas can have. So just to regulate that particular thing, we have government route. It requires prior government approval subject to conditions specified in approval. Okay, and these are the routes that are you can say these are bit sensitive. Okay, in government's scenario. So governments want to control the influence of foreign investment in these kind of sectors. ठीक है? So we have an automatic route, we have a government route. Now, how the FDI is getting regulated? So we have consolidated FDI policy 2020, and then we have FEMA rules 2019, that is Foreign Exchange Management Act 2019, non-debt instruments. So non-debt instruments are those instruments like equity shares, okay, in which we are not, foreign direct investors are not providing any kind of debt. They are directly coming into the corporate, they are directly investing in our country in terms of equity. Now there is a gross and net FDI. All of us know. I have already told you. Total foreign investment, India's productive assets. ठीक है? Whatever the total we have got, net means inward FDI minus outward FDI. That's it. This is what net is all about. ठीक है? Then FP, FPI, foreign portfolio investors. Now this is the investment by foreign investors in securities and other financial assets of another country. Now, it's not about equity. They can invest in other financial assets as well. Now, here, see, they can invest in equity shares. They can invest in American depository receipt. They can invest in global depository receipt. Now, these are the two ways via which Indian entities can raise capital from foreign countries. ठीक है? Bonds and debentures, mutual fund, exchange traded funds, etc. So, number of instrument is very large as compared to FDI for FEI people. And the reason behind it that they cannot invest, they must be investing less than 10%. If investment is in the equity share, it is in the debt instrument, it is in the bond, it is in the debentures, it is in the mutual funds or ADR or GDR, it is going to be less than 10%. And this is why we call it FPI. FDI is basically related to equity shares. Okay? If you see over here, we always talk about the equity instruments. Okay? In FPI, we'll talk about all other kind of other debt securities as well. The key features, it involves passive ownership only, no active ownership because they have a very less stake in the firms. Investors have no control over ventures, property, or management. Same reason, NRI's investments are excluded from FPI classification. Now, what is the regulatory? If you ask me, sir, what is the regulatory framework? So, Foreign Exchange Management Act and then the SEBI's FPI regulation. These are the two regulatory framework. Basically, there are multiple others can as well. Okay? But basics are these two. Now, earlier it was foreign institutional investors FII framework was earlier, but I told you FII and overseas investors, multiple other classifications were there, but all of them got merged into the FPI. Okay? Now we have major two, FDI and FPI. Only these are the two kind of foreign investment, you can say, tools that we have at this point of time in our country. And FEMA is there, which RBI takes care of this act. SEBI's regulations is also there for FPI. Okay? FDI is basically about equity and unlisted and listed entities more than, equal to or more than to 10%. FPI is basically something in all kind of instrument, including equity, and it can go up to debts or debt securities such as bond or securities or debentures or GDR or ADRs. But it is going to be less than 10%, and that is the reason it provides the passive ownership, no control over ventures, property, or management of any firm that is there in our country. The major differences are sorry, nature of investment. So in FDI, direct capital investment in businesses, enterprises with lasting interest and active involvements are done. In FPI, investment in financial assets, it includes bonds, securities, stocks, everything without management control. Level of control, FDI provide significant ownership and participation. FPI, no control, only passive holding of financial asset for the purpose of investment. That's it. Investment horizon, FDI, long term commitment, often spanning years, decades. FPI, short to medium term, investors frequently adjust based on the market conditions. So FDI is there for longer term. If you are trying to get a significant ownership and participation in management, then obviously it is going to be for a longer period of time. But FPI, on the contrary, FPI is there for a shorter term or for a medium term. And the investors are investing under the FPI regime, they keep adjusting their investment strategy as per the market trends. Risk and returns, FDI, higher risk due to long term business involvement, return via profits, dividends, and capital gains. FPI, obviously low risk because you are going to invest for a shorter period of time and you are keep adjusting your you can say your investment portfolio as per the market conditions. Okay? Impact or economy. FDI boost capital inflow, technology transfer, employment, and industrial productivity. Obviously, when someone is investing for a longer period of time, so that capital is going to stay, so production is going to increase. For that, new industries will get established, people will get employment, new technology transfer is going to be there, capital inflow is going to be there for a longer period of time. FPI, it only enhances market liquidity but is highly volatile with risk of capital flight in downturns. So you might have heard that because of any reason or any circumstances occurring on a global financial level, the foreign investors start pulling their investment. So in that particular scenario, it is basically they are talking about the FPIs. FDI is there for a longer period of time, for more than 10 years and 20 years. FPI is something that is extremely volatile in nature. It depends on the global financial condition and our country's financial condition as well. Okay, they keep altering their investment portfolio as per the market trends, and that is the reason FPI just provide you a passive ownership, or you can say a financial asset in a foreign country. That's it. FDI is all about significant ownership and participation in management, and it is going to be there for a longer period of time. ठीक है. So that was the difference between FDI and FPI. Now FDI and FPI is something that is going to be there in news all of the time. ठीक है. You should be knowing each and everything about FDI and FPI at least on a conceptual level, so that you can understand these current affairs comprehensively. So whenever, now see, FDI and FPI is something that is a static in nature. This content is a static in nature, but how it is important, obviously it gives you a clear cut idea that whenever you will be compiling, whenever you will be reading any current affairs data, you will get to know, okay, these are the data, and this is, they are talking about FDI, okay, they are talking about FPI. So okay, there is a net outflow in FPI, but FPI is volatile in nature, it is not going to impact our country that much. Okay, there is a net outflow in FDI as well, so it is going to have a higher impact because foreign direct investment is there for a longer period of time. So that is the reason. This is how these static contents will static contents provide you a better understanding of current affairs topic, and that is the reason you should be having clear cut idea of these kind of FDI and FPI kind of static concepts. Now see, in the next live session we will be discussing some major current affairs news that is there in terms of FDI and FPI in our country in the recent times. So do subscribe to our channel and turn on the notification bell, because in the next live session we will be having major current affairs discussion of FDI and FPI. Okay, and if you want to download this data, you can download it from our app that is available in Google Play Store as a name Ecoholics. And if you have any kind of queries in regards to any data that we provide on our paid courses, on our free courses, you can reach out at this number. You can take a screenshot, you can reach out. Our academic counselor will provide you better solution of every queries of yours as soon as possible and in a most appropriate way. Till then, have a great day ahead. Bye.